Good morning, good afternoon, and good evening, but hey, hopefully you're doing well. Happy Monday, Money Monday. Hopefully you all have had a great weekend. Rock and roll. It's hard to believe September is over, and we are now rolling into Q4. Well, today's episode that I want to talk about is called 13 Reasons Why You Need to Invest in Mortgage Notes. Now, I've seen some folks talk about 4 reasons or 5 reasons. I've had some students reach out to me and say, "Hey, Scott, what are some ultimate reasons that I can give when I'm speaking to either a local real estate club, my networking event?" I've had a few people ask me to get up and speak, which is great. We love it when we hear about our students speaking at their local investment clubs. And so that's what we did. We just came up with these 13 reasons why you need to invest in mortgage notes. And this is something that I think everybody that's listening to this episode needs to jot down, take notice of. We'll probably end up throwing the slide presentation in the actual description link for you guys to be able to use for yourself. And that way you can use it, tweak it, and use it for your own self if you're not one of the guys and gals that have already asked for it. But really excited about this episode. And I love using AI to create this stuff. Now, I created the 13 points with the bullet points, a few bullet points of each, but then dropping that all into Canva AI, and Canva AI really helped me tweak a lot of these slides. So it's kind of a cool presentation. If you don't want to use mine, that's fine. Use something for yourself, but absolutely overjoyed with it. So let's dive into the 13 reasons why you need to be diving into mortgage notes as or adding mortgage notes as part of your investment strategy if you're not doing it already. Well, number one is pretty freaking obvious, I should say. Steady passive income. If you're looking for steady passive income, mortgage notes will provide that right off the bat. That's really using people get into it for number one reason. They want something that's going to be steady. It's and pretty much passive for the most part. We'll talk more about that in a couple other bullet points for you, but it can be a cornerstone of well-rounded investment strategy, allowing for greater financial freedom and security. And when you invest in mortgage notes, you can enjoy a source of income that requires minimal active management while benefiting from the predictable cash flow these notes offer. And yes, notes can be 15, 20, 30, 40 years long in some cases. Are you always going to be invested in notes for that long? Not necessarily. I mean, we end up probably moving through 3 to 5 years, 3 to 7 years, depends on how long you hold the note, what the borrower ends up doing. And obviously, people end up average selling and buying a home every 7 to 8 years on average. So your stuff is going to change there. But it can just about with a lot without the you know, without the stock market volatility and stuff like that, things like that. Number one, right off the bat, is steady passive income. All right. Number two, higher returns on investment. I've always said this, especially if you're buying on the non-performing side, you can achieve potentially double-digit annual returns or higher by purchasing mortgage notes at a discount. Yes, you can buy performing notes at a discount. Happens all the time. This investment strategy often outperforms traditional savings accounts or bonds. Even the stock market, in a lot of cases, when you have the volatility, yes, things go up and go down. But if you look at the S&P 500 at the time, it's averaged about 8 to 12%, somewhere around there. Um, Picking out the right investment strategies. If you're buying non-performing and willing to work it out, if you're buying re-performing stuff where somebody's already worked it out, or even buying like short-term performing notes like hard money loans or stuff like that, you can achieve a higher returns on your investment for sure. Okay. Now, the big thing about it is that we are in collateral. The collateral security. We're buying notes backed by real estate. So in case of something happening, since you're buying at a discount, if the borrower doesn't play ball, you have the right as the lender to foreclose, to take that property back. All right. So that's one of the most important things we talk about is that we're not buying notes above 70% of value. All right. And you're buying that collateral. You're not responsible for the upkeep of the property unless you take it back. But oftentimes, since you're buying such a big discount, it gives you the flexibility to work some things. But that's the great thing. We're not buying unsecured property, which takes forever to do. We're not buying second liens. We're buying first liens in the driver position. So that way, only God, through an act of God, or taxes can wipe you out. That's why we put insurance, make sure taxes are paid. Okay. That's the most important thing that I like about that. All right. Number four, there's less competition, and especially in mortgage notes compared to fix and flipping, compared to wholesaling, compared to being landlords. All right. Most investors overlook note investing because they don't know much about it. They're not as savvy as they are with other things. But there's less bidding pressure, less having to try to upbid an asset. You're not dealing with foreclosures, where it's a very competitive and cutthroat nature with postcards, direct mail. A lot less competition. Now, some people notice, oh, there's too many note investors. There's not as many note investors as you think up. A lot of note investors don't market correctly, all right, and on a continuous basis. So there actually is, if you stick to what you're doing and consistently show up in the ways to find deals that we talk about, you're going to find plenty of opportunities out there for you. Okay. So yes, there's plenty of space out there when compared to other niches. I like also the fact that it's great for portfolio diversification. Mortgage notes add essential diversification investment portfolio. By investing in mortgage notes, you can reduce overall risk as these assets operate independently of stocks and bonds. One of the things I always laugh about is people always ask me, oh, how's your portfolio doing? Is it going worse or getting better? Look, if you're buying notes, most of the time, especially buying notes on people's homes, you're going to have a pretty rock solid, pretty secure investment being in a first lien position. Okay. And yes, they provide stability and also potential growth depending on which niche you end up going to. Okay. So portfolio diversification is a very important one. You talk about that, and that's what we love about it. Okay. Flexibility and control. People don't often talk about this, but yes, you have the flexibility. Investors can choose, like we talked about before, performing or non-performing notes. I allow them to hit their investments to meet specific financial goals. This is one thing I always talk about, especially if you're getting in the non-performing space or you're trying to, if you get a chunk of capital, go out and buy some performing notes. Go out and buy some stuff that's going to give you an 8 to 12% yield on a performing aspect and use that capital, the returns from that, to fund your life so you can actually be retired if you want to, and then focus on more of the non-performing stuff, which will take a little bit longer to get collections on. But whether you're seeking immediate income or long-term growth, the control investors have over their mortgage notes is unparalleled when it comes to being a note investor. Okay. Next, smaller investment opportunities. Yes, this is one thing that people are often surprised by, the fact that, hey, you don't need to have millions and millions of dollars to go buy a portfolio notes, even though some people out there will falsely state this. No, there are plenty of small deals that you can take place. I mean, the smallest deal I ever bought was $7, and I flipped it for $5,000. All right. I've also bought the high-end notes over $1 million on an asset in Naples, Florida. So you don't need to have huge millions of dollars. There's plenty of deals that our investors are buying for a few $1,000s, getting their feet wet. And the actual average note, I would say the first note that most people end up buying is not in, say, California, in LA County or in Miami Beach. It might be in Ohio, it might be in Michigan, it might be in Indiana, where property values are less. But if you're buying a distressed or discounted note, you're getting at an investment amount, 50 grand, 60 grand is usually, say, about the average size of the individual note. Now, obviously, as values go up, the investment goes up. We're no longer just paying like $5,000 for a note on a Miami condo. You might see some opportunities like that later on. Who knows? But that's one of the great things I've always liked about note investing. It's really, if you've got money sitting on the sideline, 50 grand or more, not doing anything, you can go out and buy a note and start getting a great ROI on your small investment amount. Okay. That's one big thing I think is way over fix and flipping and other things like that for you, especially in the commercial real estate side of things. All right. Lower correlation of market volatility. Talked briefly about this. Notes don't move in a panic. Okay. And there's not a stock market rumor that's going to cause your note to suddenly crash. Okay. That's one of the great things is we don't worry about interest going up a quarter point or a half a point. We're not worried about some rumor changing things. We're not worried about things. What is owed is owed. Okay. Now, if the borrower stops paying, guess what? You foreclose and you take that asset back at a higher value. Okay. That's the one thing that you worry about, is the borrower going to pay or not pay. But part of your due diligence aspect of things is you're buying existing notes. The borrower already has a payment history. They've already got some emotional equity. They've already got equity into the property and what they've put into it or bought. So that's the great thing, is we don't worry about news media changing how our payments are made. Okay. Now, occasionally have things happen like COVID or something like that, national thing that could affect things, and that happens. But the great thing is even during that period of volatility with chaos in COVID, we still saw 80, 85, 90% of the borrowers out there still paying on time. All right. Or they needed a short reset forbearance agreement to get back on track too for you. Now, I also love the next aspect of it is the access to different real estate markets. Living in Austin, Texas, this is one thing immediately when I started doing this almost 20 years ago that I liked, is I could literally see deals, great discount deals all across the country, specifically in different markets I wasn't living in. You'll see a lot of note investors out of California invest in other states because it just doesn't make sense to buy there. You'll see investors out like Oregon, Washington State, where it's not very friendly, or in other long foreclosure states like New York, New Jersey, wanting to invest in other states through their note business because it does give them access to better deals, better discounts, without all the chaos and the political or corruption or stuff like that that takes place in some of these markets out there. So you're not beholden to your backyard like most people when they get into fix and flipping wholesale, and that's where they're at. Oh, I got to go out and touch it and hug it and rub it. No, we invest in about 20 to 30 different states at any given time and a variety of different markets out there for us. So that's a benefit. We have a lot of folks even overseas who are listening to this or watching this who invest in the United States because of the often opportunities of buying mortgage debt in the United States. All right. Mitigation of inflation risk. We're not worried about inflation as property values and interest rates continue to rise. Mortgage notes investments can likely keep pace, helping preserve your purchasing power. By investing in mortgage notes, you create a robust defense against inflation, align your income to grow in line with market conditions. This strategy provides investors with an opportunity to safeguard their capital while benefiting from the appreciation of real estate assets. Okay. So we've seen this happening. If you've got mortgage debt, the borrower owes what they owe. The inflation goes up or stuff like that. The last thing that's going to not get paid is the actual mortgage in most cases. Housing, people are going to pay that. They'll stop paying their credit cards. They'll stop paying their student loans. They'll even stop paying their auto loan payments, but they won't stop making their housing payment. They don't want to lose their house and go from there. Okay, so that's the great thing. One of the great 13 things about no investing. Okay. Opportunity, we talked previously about this for passive income, but also opportunity for passive wealth building. All right, mortgage notes can be a source of passive income that grows over time, allowing investors to build wealth with minimal active management. We'll talk about that active management in a minute. They provide a unique opportunity where investors can enjoy financial benefits without the daily responsibility of traditional real estate management. That's what things, if you start putting money away, and one of the great things that we've done for years is show people how you can create 6 figures a year in passive income. That's going to build wealth for you. If you diversify your income with mortgage notes, it's going to create wealth for you because you're buying stuff at a significant discount, usually than what's owed. All right. It's a great way to get into markets and take advantage of the opportunities available, folks, and build wealth by buying the assets or buying the notes that control the property at a significant discount. And then if the borrower stops paying, you end up taking an asset over and going from there. So this is one of the great things. This is why banks are in the lending business. Lenders are always the biggest buildings. They're also the most wealthiest companies out there. That's why notes are a great thing. It's an opportunity for you to build passive wealth. All right. Now, another thing, if you're not a real estate investor, you may not know what a self-directed IRA is, but notes are the perfect investment vehicle for self-directed IRAs of all sizes, whether it's an educational savings account, a SEP IRA, solo 401k, a Roth IRA, traditional IRA. So many different opportunities for you to put your money to work into notes, whether you're lending money out of your IRA as a note, like your owner financing or providing a hard money loan, or buying the notes inside of your IRA and being the lender. So it is the perfect vehicle. Actually, this is the #1 investment vehicle of IRAs out there in the self-directed space. Besides, obviously, banks and hedge funds and stuff like that, traditional lenders will offer up, funds or things like that in their IRA. But yes, you can use your 401k or your IRA to buy notes. You just need to roll it into a self-directed IRA custom like IRA Financial, American IRA, Equity Trust, or something like that. But it is perfect for self-directed IRAs of all amounts and different sizes. Okay, we have investors using all their types of different self-directed accounts to invest in notes and get better returns, really. Right? I'm a big fan of third-party support. You can't do it all yourself. And that's one thing that stops people. They don't know how to rehab a house. They don't know about marketing for wholesalers or flipping stuff. They like to buy something that's passive. They don't want to deal with toilet stands and trash outs. They don't want to be a landlord. This is one of the best things that I've always loved about note investing is that the third-party support side of things. You're hiring licensed vendors like attorneys and servicing companies. They do the heavy lifting, the borrower outreach, the foreclosures. You got to be responsible for finding the deals and raising the capital for it if you're not using your own funds. But the third-party support is, I don't want to say set it and forget it, but you can put it with licensed individuals that cover the licensing in most of the states out there you can be buying in, who are going to be professional. They're going to handle the emotional side of talking with borrowers on your behalf and help you come out with a true win-win solution to help you capitalize on what's going on in the market. Now, if these 13 things sound great to you, I encourage you to check out our upcoming virtual note buying workshop in November. It's hard to believe. It's just about 45, 47 days out. November 14th, 15th, and 16th. That'll be online via Zoom. That's the virtual note buying workshop, and you get signed up by going to notebuyingfordummies.com. That's notebuyingfordummies.com. So let's go back here real fast. We'll do a quick recap of the 13 reasons why you need to invest in mortgage notes. 1, steady passive income. 2, higher returns on investment. 3, collateral security. It's real estate backed investment. 4, less competition. 5, portfolio diversification. 6, flexibility and control. 7, smaller investment opportunities. 8, lower correlation of market volatility. 9, access to real estate markets. 10, mitigation of inflation risk. 11, opportunity for passive wealth building. 12, perfect for self-directed IRAs. And 13, your third-party support. You don't have to do it all, ladies and gentlemen. You can leverage notes to not only turbocharge your portfolio, but can also become a great way for you to stop sitting on the sidelines and get into the real estate investing game. Become a note investor. It's easier than you think about. So check out our upcoming class to find out how you too can dive in the note space by going to notebuyingfordummies.com or check us out at weclosenotes.com. Go out, have a great week, and we'll see you at the top, everybody.